You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back for episode 2 of our doubleheader of Options Bootcamp with the cool kids call OBC. My name, of course, Mark Longo from the OptionsInsider.com, as well as from the network upon which all of you folks are hanging out, having a good time, enjoying Thor, a.k.a. the Hot Options Report, the latest addition to the network. Yet another reason why you should be subscribed to the full network, wherever you get your favorite podcast, not just OBC. And then, of course, if you want to go above and beyond, you want to check out everything cooking on the Pro. Man, there's a lot, including 5 episodes smacking you in the face today if you're hanging out in the live. I hope you came ready for some content today, listeners. Only one place to get it all. The optionsinsider.com/pro is the place to go to get it all in your ear holes right now. For the on-demand stuff, that'll start trickling out next week for the rest of you on the full network out there. You don't have to wait any longer to hear from our black-hatted compatriot out there, none other than Mr. Dan P., Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call Mr. P., how go things in MTM? Are you enjoying part 2 of our doubleheader extravaganza, sir?
I am. We haven't had a doubleheader in a while. This is great. It's a marathon. I got to drink some water, dump it over my head, the whole shebang.
Strap in, then come back in a little bit when I do 2 more whole shows, then come back after that when I do an additional show, and then talk to me about feeling the pain out there, sir. But you know what, listeners, we're never feeling your pain when we're rolling with your questions. Let's get to a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, buddy, welcome to the mail call. Once again, you folks have outdone yourself with epic treatises, Dan. We always ask for details. That helps us help you at the end of the day. And you folks have delivered. I feel a little bad, Dan, for our first question asker, Mr. Ben Himes, because he sent in an epic treatise. Then he amended it with added more detail. So a second kind of epic treatise attached to the first epic treatise. And then he wrote at the end of all of that a third time to say, oh, wait a minute. I got to take all that back. I got to change. But you know what? It's informative nonetheless. I'm just going to hit on the salient bullet points here because it's a good example, listeners, of sometimes things look a little bit too good to be true, Dan. And you look at the chain and you're like, why am I getting so much to sell that put or to buy that call or whatever the case may be? It seems like I can't lose. And sometimes that's when the hairs on your back of your neck should stand up. And so Ben did the right thing. He wrote in and said, what am I missing? And then he figured it out on his own, which is also impressive out there. But I'll just give you the salient bullet points, Dan. We won't do the full thing because we'll be here for 3 shows. But all right, Ben wants to know, this is the question for Mark and Dan for Options Bootcamp. I've been listening for a bit over a year. He puts in parentheses to most of the network. I tip my cap to you, Ben. You are a hearty listener. There's a lot of content coming at you. I thank you for enjoying it and listening to it all. Oh, he's also a man of poor taste, Dan, because he says, I've also enjoyed Dan's books. No accounting for taste. He won points listening to the full network. Now he's giving those points back saying he likes your books. We win some, we lose some. Dan.
It's really funny, Mark. Really funny.
Oh, he also says the experiences you share help round out my textbook knowledge to feel more comfortable trading options. Look at you, Dan. Let's get in all the love here. So there you go. He's buttering us up for the epic treatise to come day. He's a smart man. He's a smart fellow, this Ben. He says, all right, here's a detailed question using a trade I just put on, paraphrase as needed, but per your usual admonition, I'll over detail. And he did. He said, I have a trade on that seems too good to be true. I want to make sure I'm looking at the risk analysis correctly. So what he ended up looking at, listeners, the setup, as he puts it. I want to buy a put calendar in Johnson & Johnson around the 170 strike, which by my math right now looks like J&J is trading around 167 and a quarter. So that's obviously an in-the-money put calendar, which he points out it is an in-the-money put calendar. He says he wants to buy it on the August 15th and then 25th expirations. Looks like he's writing here a 10-day calendar. Obviously, we know that doesn't exist. There are no options expiring on the 25th. So I'm going to assume it's a typo, and he means the 22nd out there, listeners. So a traditional 1 week put fly. Now he says J&J has a dividend of $1.30 that is payable between those expirations. His goal is to be assigned on the short puts on the 15th. Remember, he is selling in the money options, so there's a high probability of that, listeners, get assigned the stock and then either exercise the long put against it. Obviously, in between, he wants to capture the dividend first, then exercise the long put against it. Or if the stock takes off after he owns it, sell the shares and the put if the market is good enough. Sounds simple enough. But he's doing some size here. Looks like he's doing a 100 lot of this put calendar, which he says he pays about 20 cents for. So obviously that's a $2,000 outlay. But that's not all. Remember, it's a put calendar, so there's a short leg. So if he gets assigned on short 100 of the 170 puts expiring on August 15th, that means he's buying 10,000 shares. So that's not an insubstantial outlay. Obviously, you can do it on margin, get about half the cost, but still, there is a cost involved in that. Don't forget about that when you're looking at trades like this, listeners. There is no free lunch at the end of the day. And he runs through a bunch of potential outcomes. The market tanks. He gets assigned, and then it's his worst case is his carry cost, which he thinks, and he calculates, he says, as 94 cents. He did a lot of math here, so tip the hat to him for the detail. He says the dividend is $1.30, so even at that, he should still make 16 cents profit on his 100 lot, aka $1,600. If it blows past the 170 strike, and he never gets assigned, then he's just out his $2,000, which he's okay with at the outset of this trade, sounds like. He says nothing big happens. I get assigned the short puts. He exercises them on around the dividend. You can calculate his carry cost. I'd love to see that. 11 cents he assumes for 4 days of holding the stock. Again, not an insubstantial stock position. So he thinks he could clear $1.30 minus 11 cents minus the 20 cents he paid. So 99 cents, aka $9,900 on his 100 lot. He has a couple other scenarios he mentions here. But as he points out, that sounds almost too good to be true. What is he missing? He did find out later, Dan, that after multiple amendments to his question, he discovered his own answer, which again, we applaud all of our listeners for doing this. He said his broker, IB, incorrectly listed the ex-dividend date for the stock, Dan. So that was what was gumming up his analysis. He thought it was the 19th between his expirations. Instead, it was the 26th. So beyond both of them. So at that point, moot for his trade. That explains the discrepancy and why the trade seemed to be too good to be true. It was, which makes my question moot. I'm sorry for wasting your time, he said. But you know what? It's never a waste of a time out here, Ben, because you learned, I think a lot of our listeners can learn too, just do a little bit of due diligence on your own. Contact your broker if you see something weird in their chains. Brokers are not infallible. They put up wonky stuff all the time. And something like dividend dates, that kind of data, they're pulling a lot of times from third-party data providers. The third-party data provider has it wrong all the time. I see it in a lot of different platforms that we use. All the analytics suite we use. Could be QuickStrike, could be Trader, any of them. They're all pulling different dates. They'll have different dates for different things. And you're like, wait a minute, I thought it was on X date, and this one's saying Y. So sometimes it behooves you, Dan, to do a little bit of your own due diligence. So if you see Like in his scenario, he thought he could risk a few $1,000s to make maybe 5 or 10x that. Might be too good to be true. He does leave us with this, though, Dan. Love the show and listening to your banter. Mark, I also noted, he calls you out. He said, Mark, I also noticed the black-hatted one is adopting some of your lingo in his new wealth building show. You should charge a small fee. Dan, are you ripping me off on your wealth building with options show? Our listeners are listening. They're calling you out, sir.
I don't know. Ben, type or send in what specifically it is. I don't know. Is it just regular old options lingo? I don't know.
I bring a very specific verbiage to the table, sir. Hard crafted over 18 years of doing. If you're ripping me off, sir, my lawyers will be in contact post haste. How dare you, sir?
Let me know. It'll be an interesting sociological and etymological.
I just like the notion that I'm infecting you on some subconscious level and it's spilling over into this other show you're doing without you even realizing it. That brings a smile to my face, Dan. He says, I really miss the show, but just in case, please let me know if you plan to. We did address that, what there was to address, but I'm glad, Ben, you sussed it out. And it's just a good example for a lot of our listeners. Sometimes if things are too good to be true, Dan, they usually are. Maybe this next one, Dan, is too good to be true as well. This comes from Michael K. He writes in with his own kind of strategy. He said, have you heard about this? He says, I wanted to bring this subject to your attention. It is called ultra premium harvesting, Dan. So right away, it's got a sexy title. I'm intrigued. Tell me more. He says, it's selling covered calls and then buying to close the calls and reselling the covered calls. I make an extra $1,000 to $1,500 a month with this strategy. I thought I would share this with you. Thanks. So that's all he sent in. So our producers wrote back and said, just to clarify, are you just buying and selling the same call over and over again? That seems to be, you're generating some fees for no reason. You could just sell the call and let it go to zero if you were so inclined. So he wrote back, he said, yes, buying to close the same call and reselling it. But then he clarifies. He says, for example, selling a covered call on Apple for the 212.5 strike, then the stock dips a little bit, buying to close that call, then reselling a new covered call at 210. So that makes a little more sense. He's not just buying and selling the same call. So he said yes, but that's actually not what he's doing. He's actually, Dan, kind of chasing the stock down with his strike price, which is not a new thing. People have been doing this forever. You've given it a sexy moniker of ultra premium harvesting, Dan, but you're really just chasing the stock. There's pros and cons to this. He says he's getting a little bit more juice. If you're getting a little bit closer to the fire, that is the case. Of course, you're closing out your other call, which would be a winner as well, and taking some of those gains off the table. So I guess, Dan, it depends on your outlook and how close to the fire you like to play your covered calls. Because if you're chasing that at the money strike down, guess what could happen, Dan? You're chasing it right back up the other way as it blows through your strikes. And now your ultra premium, the $1,000 to $1,500 extra you're making, is gone on just blowing through your strikes and having to chase back to the upside. So I don't tend to do this myself unless my outlook really has changed. If I sell a covered call, it works out pretty well. I'll buy to close it. Maybe I'll look to rinse and repeat on another month, maybe the same strike, maybe different strike, depending on my outlook. I can't think of a time, Dan, where I sold a call in a month. It worked out pretty well. The stock, let's say the call eroded down. You make 60, 70% on it. You buy to close it. And then I turn around and just sell another meaty call a few strikes below. That just seems to me like chasing. What are your thoughts?
Yeah, I guess I would have a lot of questions just to see what specifically the catalyst is. I always try and put these things together and try and back out some rationale for it. And I don't know, maybe if you're thinking about it like in terms of z-scores or like fractional standard deviations or whatever, however you want to put it, maybe at some point in time, 212.5 is 0.6 of a standard deviation. But then as time passes, 210 is 0.6 of a standard deviation. And you've got some back testing or rationale to think that. I could see it. Or maybe if the stock drops a certain amount, I don't know. Yeah, it's interesting that there are obvious potential drawbacks and there are obvious potential advantages. Yeah. Okay. I'd love to see you flesh it out a little bit more for us, Michael.
Dan gives it a tentative, subtle nod of his head. But you're right. Yeah, we need more details on it. There's obviously some system behind how and why you're doing it. It's not just, oh, the next strike down. Maybe it's technicals, Dan said. Maybe it's your outlook has changed, something else like that. Otherwise, like I said, you're just chasing the stock down and hoping to squeeze every last ounce of juice out of that stone, which can work. Ideally, if the stock keeps dropping or stays where it is, you're going to squeeze a little bit extra juice out. So you can make, in some scenarios, a grand 15, which is not bad. That's great. But obviously, if it reverts, that could be a little bit damaging as well. So yeah, if there's more nuance to your system, who wrote that in? Michael K. The Michael K. Hit us up. Let us know. Maybe you're onto something that is revolutionizing the world of options. We are always open to that. How awesome would that be, Dan, if one of our listeners sent in this completely unknown strategy that just revolutionizes the entire landscape of options trading? Then wouldn't that be great?
Yeah. I mean, like you said, maybe he's onto something or maybe he's on something.
Yes. Of course, if they did, that episode would never make it to air because Dan and I would be like, wait a minute, this is revolutionizing the entire options market. And then we just do it for ourselves. And you would never hear the light of day. I'm just kidding, listener. You would hear it eventually. I'd have to fight Dan to get it out there. Dan would be like, don't release it.
We'll invite you to join the OBC hedge fund.
There we go. Yes, OBC, the OBC, a well-capitalized hedge fund at that point. All right, let's go to this question from Three of a Kind. Guessing maybe he's a poker fan. Because I heard Mark mention SVIX a few times on the program. Can he explain his use case for this seemingly obtuse product? Inverse volatility hurts my brain. You're not alone out there. Who wrote this at Three of a Kind? It's a product that's not for the faint of heart. It's not for everybody. A lot of people just hate the fact that it exists. And I'm okay with that. If you're in that camp, our buddy Mr. Overby, he never wanted this thing to come back to life after XIV died. So it's okay if you don't like SVIX. It's not for everybody. But as you mentioned, it is an inverse VIX product. So one of these Franken products. So there are all kinds of issues potentially with a product like that. If you want to know what I'm talking about, go look up XIV, which was the previous product that attempted this. And look what happened to that in February of 2018. Interesting times out there, listeners, for all things vol related. And if you want to learn more about how a product can die in the inverse vol space, look up the history of XIV and what happened out there. So obviously that is a concern with SVIX. They claim to have addressed that in the construction. They also buy and hold VIX calls, which may seem counterintuitive for an inverse vol product, but they do that against the worst case scenario. And we have seen a few vol spikes in its life, most notably about a year ago with, of course, August 5th meltdown. Then, of course, back on April 8th with vol getting juicy as well. And the product has survived. It got low, it got cheap, but it didn't go the way of the dodo. So those are good signs that some of those fixes have been reliable in hot markets, spicy markets out there. My use case for them is a couple of fold. When it got really cheap back in April, I just bought some of the underlying because you knew eventually it's going to revert and get much higher again. We've seen SVIX get into the 30s and even above into the 40s as vol erodes. Also heading into the summer months, usually you see vol come in a little bit, so not a bad time to have a little bit of SVIX in your back pocket. And then also selling puts, getting the underlying put to me, doing a little bit of that old wheel strategy. I like to do that as well. Those are probably my two primary use cases. Buying the underlying, I think it's going to gap, and also selling puts, harvesting. I've been doing a lot of premium harvesting out there over the last month, just selling puts and collecting as it's rallying out there. And then once in a while, if I get it assigned to me, I'll wheel out or I'll add it to the existing stockpile of SVIX that I have and maybe wheel out and then ride that up a little bit, which has also been a good trade. That's my primary use case for it. But again, it's not for everybody, so you shouldn't feel compelled to have to trade it. Mr. Dan, are you an SVIX guy? Any thoughts here for, what is it, Three of a Kind?
It's not something I have really dabbled much with, to tell you the truth. It's one of those things that I have on my list of trades to explore a little bit more so that I can get some sort of edge on it. But I've just got a lot of tinkering with other stuff I've been doing. Yeah, I got nothing against it, but just haven't quite looked into it enough yet.
Dan is morally opposed to all things SVIC. Three of a Kind, you have offended him. All right, we got time for a couple more here. Let's go to Snipe Hunt. Got some good handles this week. Snipe Hunt wants to know, can Mark and Dan do an episode of OBC on how to trade precious metals, the products, the strategies, etc.? We could do a full episode, but it's pretty easy on the product front. Dan, maybe you have some additional thoughts, but if you're trading precious metals and you want a product that's a good one to put in your securities account, you can trade options on. look no farther than GLD and SLV. They're perfect for that use case. They're ETFs, unlike a lot of ETFs that attempt to replicate some sort of futures position and do maybe a middling job of doing that. GLD and SLV hold physical gold and silver, so it's perfect. They don't suffer from the roll yield or anything else like that. It's pretty good on the tracking front as well. You might have a couple of nibbles here or there, but really when it comes to tracking and when it comes to not having to deal with roll yield and all that crap, it's hard to do better than GLD and SLV. They're highly liquid on the option side as well. So if you want to sell puts to get in, if you want to buy calls, sell, whatever you want to do, calendars, you can get it all done in GLD and SLV. So for me, I think for most people, Dan, it begins and ends with GLD and SLV, at least on the product side. And strategies, you can do what, I mean, I guess it depends what your outlook is. If you're bullish, you can do anything you want on the options front. And if you're bearish, same thing, because they're so liquid. Dan, what are your thoughts, GLD and SLV? And maybe you have a different product you prefer.
Though they're funny. What I do with those mostly is I actually, every once in a while, you have a little bit extra cash laying around, just buy some of the physical. So I don't do too much with the ETFs. I look at them because they provide a pretty nice chart, because when you're talking about physical gold, it's really hard to get an accurate chart of them. So I look at that and just realize that, yeah, there's some fees involved, very, very small fees and such. So I think underperforms the physical in the long run slightly, but yeah, that's mostly what I'll do. Every once in a while, I will dabble with a spread or something in them, but that's about it.
So you're a little gold in the safety deposit box kind of guy, sir, for going back to our apocalypse asset poll from a few months ago, Dan?
Yeah, and not a lot or anything like that, but hey, you never know. You never know.
Put little grandma's jewelry in the safety deposit box for a rainy day. Our chat's bringing up a point. A few people have brought this up, some of the more conspiracy-minded folks. That's why I mentioned there could be some issues with GLD and SLV. They say you don't know how much gold and silver those ETFs hold. They won't let me audit them. Our chat says he's demanding to audit them. They won't let him go in and count, Dan. But I have heard that complaint from other people before. There are some questions about exactly how much they hold. So if that applies to you, maybe this isn't for you. But for most folks out there, I think GLD and SLV fit the bill. We'll get out of here, Dan, on a very nice request from Annet. Annet says, hey guys, thanks for all the awesome shows. You've taught me so much. Thank you, Annet. Right back at you. Thanks for listening. I might be in Chicago for the first time ever around Thanksgiving. I want to check out the SIBO and other cool things out there in Chicago. What are the chances of stopping by the studio to say what's up? Hey, we love all of our listeners. We encourage you, take a trip out here if you can. Come check out the SIBO. Go throw some TP on Dan's house. A lot of good fun things to do in the Chicagoland area. Unfortunately, we closed up the in-person studio back in the onset of COVID. We never really reopened it. Dan was in here before. Dan hasn't even been back here in the in-person studio since the heady days of COVID, Dan. So we don't really have a lot for the in-person visitors to swing by the studio. I wish we could sit you in the desk. We could have you do some fun stuff, but the studio isn't set up for that right now. So I appreciate the inquiry, Annet, and everyone else who's asked to do something like this, but unfortunately we're not set up. But you know what? Let us know when you're coming to town. Maybe we'll see if we can set something else fun up for you. And Mr. Dan, if they want to TP your house, give them your home address.
Yeah. Annet, we might actually be at the CBOE in November. We're considering doing a mastermind, but we're just considering it if we get enough interest. But I can have one of my guys email you and just see if that is something that makes sense for you.
There you go. Maybe you can meet Dan in person. And maybe I'll swing by just to be the nice guy that I am, Mr. Dan. But unfortunately, that's all the time we have for episode 2. Dan, man, doubleheader flies by when you're having fun, Dan. Did you have a good time?
Yeah, this is great, man. This is super great.
But folks want to reach out, not just to TP your house, but with questions. Where should they go? What should they do?
Make your way on over to markettaker.com, 2 T's in a row, and we'll see you there.
Markettaker.com. Be there or be square. If you're hanging out in the pro chat, just hang out. I'll see you back in a few minutes with yet another Dan. Dan squared on the network today. Good old Dan the Man Gramza to hold court on all things futures. If you like a little bit of 10-year note, like a good buddy Uncle Mike, it's going to be a good couple of episodes for you. And then, of course, back one final time for the Hot Options Report before we're back for our Thursday triple header of the Option Block and This Week in Futures Options, and Thor yet again. And Friday, coming back with special guests on Vol Views and special guests on Options Oddities to round out your week. Remember, if you want to check Oddities, theoptionsinsider.com/pro is the place to go next week. No live OBC next week, of course, because Dan and I will be traveling, but we're back again. You'll get your on-demand show next week, don't you worry. Back again in 2 weeks, live, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.